The intent of the BA reporting requirement is to help U.S. law enforcement combat money laundering, the financing of terrorism, and other illicit activity. The CTA is not a part of the tax code. Instead, it is a part of the Bank Secrecy Act, a set of federal laws that require record-keeping and filing on certain types of financial transactions. Under the CTA, BOI reports will not be filed with the IRS, but with the Financial Crimes Enforcement Network, or FinCEN, another agency of the Department of Treasury. Below is some preliminary information for you to consider as you approach the implementation period for this new reporting requirement. What entities are required to comply with the CTA letters BOI reporting requirement? Entities organized both in the U.S. and outside the U.S. may be subject to the CTA letters reporting requirements. Domestic companies required to report include corporations, limited liability companies or LLCs, or any similar entity created by the filing of a document with the Secretary of State, or any similar office under the law of a state or Indian tribe. Domestic entities that are not created by the filing of a document with a Secretary of State or similar office are not required to report under the CTA. Are there any exemptions from the filing requirements? There are 23 categories of exemptions. Included in the exemptions list are publicly traded companies, banks and credit unions, securities brokers, dealers, public accounting firms, tax-exempt entities, and certain inactive entities, among others. Please note these are not blanket exemptions, and many of these entities are already heavily regulated by the government and thus already disclose their BOI to a government authority. In addition, certain large operating entities are exempt from filing. To qualify for this exemption, the company must employ more than 20 people in the U.S., have reported gross revenue or sales of over $5 million on the prior year's tax return, and be physically present in the U.S. Who is a beneficial owner? Any individual who, directly or indirectly, either exercises substantial control over a reporting company, or owns or controls at least 25% of the ownership interests of a reporting company. An individual has substantial control of a reporting company if they direct, determine, or exercise substantial influence over important decisions of the reporting company. This includes any senior officers of the reporting company, regardless of formal title, or if they have no ownership interest in the reporting company. The detailed CTA regulations define the terms substantial control and ownership interest further.